Hey Goku, it's been a minute since you gave back my laptop. So I just happened to log into my profile and look at my history, and I saw what you were looking at. You know what? I'm not one to judge, but you're a pretty sick dude. So if you really want me to keep my mouth shut, you should probably buy lunch. My man, I'm getting extra noodles today. Hey guys, welcome back to the After Hours. I'm the ATL Beast, and today we're going to talk about seasonality in the market. To help us talk about this, we're going to talk about what happened this week in the market. Now, what you have to know is that there are several healthcare stocks, and these healthcare stocks, as well as other stocks, they're usually the same companies. And when it comes to the money that comes in and out of the market, as well as these individual companies, they come in seasons. Now, there's usually 4 quarters when you split up the earnings for a company. But the seasons are what really matter. If we break it down and focus on the penny stock market, you'll see a dip in market activity during the summers, and then you'll see a spike in market activity during the winters. When we look at the healthcare sector, we see a lot of them during the winter. And we see that because a lot of people are reminded of diseases. Now, everyone's already aware of this. They have all kinds of effects like the January effect, the February effect, the December effect, the Christmas effect, the Halloween effect. All these special names that pretty much says during the fall and mostly during the winter, there is a transition in the market. And this transition includes a large influx of volume and retail traders and manipulators. Pretty much everyone and their mom is joining the market during these 4 months. Now, when we look at penny stocks in general, we know that we need volatility as well as volume for money to move. That makes liquidity. Now, the highest liquidity happens during the holidays, Christmas, Halloween, Thanksgiving. It's money spending season. Now, what this really means is every 3 months, you should take your system, you should take your trading plan, and you should reevaluate how much risk you want to put in the stock. Now, the risk management is how much opportunities are actually available in this 3 months. And understand, it should be a fluid process. If you just came back from the summer where it's a dip in market activity and it slowly picked up in the fall, maybe it's going to pick up even more during the winter. Now, when we talk about the transition from fall to winter, we understand in the penny stock market, what that looks like is healthcare stocks are popping up. Not only are the opportunities for stocks starting to increase, but the volume in the pre-market as well as the overall market is starting to increase. What's happened in the past few weeks, even months, you've seen very few A+ setups. All the stocks are very cheap or they're extremely low floats. But in the recent month, we've seen a lot of healthcare stocks. They haven't been A+ setups, but they've been filled with most of the volume. That's because people are sensitive to the healthcare stocks during this season. The market is training people to chase at the open and fueling most of these stocks to short squeeze. Now, these short squeezes, we understand that this is market makers and the manipulators. Now, they love Christmas because that's where the money comes in. Now, the main reason for this is because a lot of people are trying to focus on their taxes. Now, taxes start on October 1st, at least in the US. In other places, maybe it's the 1st of January. But at the end of the day, a lot of people are focused on making money moves during the winter. And that includes the market makers and institutions, as well as banks. We've seen a dead market for the past few months, but this week showed there was a spike in the volume for penny stocks, and specifically in the healthcare stocks. This could be the subtle sign that there will be plays in the near future. This week we saw SLNO as well as BNOX. These are 2 healthcare stocks that deal with biotechs. Now, when we talk about biotechs, we know that they're very volatile. They have a lot of volume, but what you really need to know about these 2, they both found groundbreaking research on disease in medicine. One made a breakthrough with PTSD medicine. Another made a breakthrough controlling hunger pains. Now, both of these are very general symptoms that are being controlled, and they fit all kinds of diseases. And because of that, the hype, even if you didn't really believe it, you still wanted to trade it. And so did everyone else, because these stocks went over 500% just in their pre-market. If we rewind back to last year, we'll see stuff like Cosmo, where maybe there's gonna be an error and things go from $4 all the way up to $24. But no matter what happens, when we talk about this seasonality, you need to understand that we're still transitioning right now. The plays are not here, but you should be practicing your patience and your risk management. You need to understand that there is gonna be a peak in the opportunity, and then there's gonna be a dip in the opportunity. During the lows, you should probably be trading very small because there's gonna be a lot of feints a lot of jabs, a lot of jukes. And during this time, you don't want your ankles broke. You don't want to miss a limb. Every loss should be something manageable because this is your drawdown. When we talk about drawdown, it doesn't matter if you're a discretionary trader or a systemic trader. Everyone goes through drawdowns. It's just a part of how trading works. The setup is going to ebb and it's going to flow. During these ebbs, you need to size down massively. That's the only way to stay consistently profitable. So when we think of medicine, we think of side effects. And SLNO, they made a breakthrough in their research for controlling hunger pains. It went crazy in the stock market because it had no side effects. And the FDA is likely to approve something like this. So the stock originally was at $4. It went all the way up to $30 before it closed at 26. And then traded the rest of the week around that area. Now we have to understand, sometimes when the news is so strong, even through the typical dilution where they take millions of dollars out, the stock will still stay up. And that's what happens with these healthcare stocks during the winter. They don't make sense, but they attract enough volume to create volatility that you could probably make some gas money. The second ticker we had this week is BNOX. Now, Bionomics, this is another biotech company. BNOX was one of those massive parabolics that we wanted to trade because it faded at the open, and that was an obvious sign of dilution. When you look at the dilution for BNOX, it doesn't have a strong history of dilution, but the company themselves would be crazy not to dilute the stock after it went up almost 700% overnight. So you need to understand that most of this stuff happens on a cycle. There's one part of the cycle where you're starved for a trade. Other times you're going to be very patient and you may even skip a trade because that 94% that's losing, they either don't have the courage to get inside or they don't have the self-discipline to control the timing. When it comes to seasonality, if you respect the concept, you can survive the drawdown. And that's what it's all about, surviving the drawdown and letting the profits run. All right, guys, that's all I got for you today. If you like what you saw, hit the like and subscribe button, and I'll see you in the next video. Peace.